We are with Jesse Berger, the one and only Jesse Berger. He has thoughts and opinions, and he's not scared to share them. And Jesse was one of the people that I secretly seeded inside the Your Life, Your Terms event because I was trying to put Bitcoiners in strategic places around the event, because that is maybe just how I get a kick out of life right now, talking about Bitcoin in areas where people don't expect Bitcoin to be discussed. But so thank you for being at that event where Jeff Booth spoke and gave that kind of talk. I think a lot of people thought his talk was like a heavy talk, but for me, I want people to think critically about the world. So I really felt really grateful that Jeff took the time to come out and then present the way he presented, just to get people thinking about things and the world and money, maybe in a way they hadn't. And just so you know, probably 10% of that room are really good Bitcoiners, but then there's a vast majority of that room who, haven't been exposed to some of these ideas.
Yeah.
So thanks for being there. You were part of my secret plan, Jesse.
Yeah, no, thank you for having me. And I'm sorry, I showed up, I think 20 minutes late because I was like, I'm not a morning guy. And so I showed up, it started at 8 or something and it was in Mississauga. I was like, I'll get there 8:30, 8:45. I'll be fine. And you had already said my name on stage.
Yeah,
Jesse's in the room. Raise your hand, Jesse. And I wasn't there.
Just for context, there was like 5 people total I called out. It was my wife, my sister-in-law, which I'm very happy I remember.
Oh, wow. I'm part of the family.
And there was like 3 other people and you were one of them. And then I'm, hey, Jesse, I'm so happy that you're here. Where are you, Jesse? Where are you? And no hand goes out. Okay. Well, yeah, Jesse might be here later.
Yeah, I hadn't had my coffee in me. And
pull the mic a little closer to you there.
Sorry about that. Yeah.
No. So I want to pick your brain about some centralization threats around Bitcoin. I'm just interested in your thoughts. I think Bitcoin's resilient enough now to withstand almost anything, but I still like thinking of attack vectors and how things could, happen. So I want to talk to you about that. But first, this whole Alberta Canadian pension plan, I'm out of the loop entirely. I've been busy the last few weeks and I usually keep abreast of this kind of stuff in Canada. But what's going on? Is Alberta saying they're just not going to contribute to the Canadian pension plan?
Yeah, sorry. So for reference, for anyone listening, this is now the blue. I'd mentioned this to Tom just as we were speaking before going on air here. But I just find it very interesting that Danielle Smith in Alberta has proposed this plan to pull Alberta out of the Canada pension plan. And that's got Ottawa up in arms. And it got me curious about, if the idea is that everyone contributes and for everyone that contributes, there's going to be, roughly that amount or an equivalent available for them to withdraw at the end of the day. It is a pension plan that actually has assets. It's not an unfunded liability like the US. And I have a fun story to tell actually about the US. I'll get to that in a minute. But so I saw on Twitter, Christy Freeland, during one of her recent press conferences, I think it was on Monday, had said the CPP, the Canadian pension plan is one of the crown, quote, the Canadian pension plan is one of the crown jewels of the financial infrastructure that underpins our country. It underpins our AAA credit rating because it is well funded. It just got me thinking, it seems like a strange thing that she's really leaning hard on our pension as a crown jewel that underpins the Canadian economy's credibility. I mean, not that we should care what credit rating agencies say. They're completely corrupt and they miss every financial crisis. So the ratings don't actually matter unless you're in government where
she misspeak there or let something out that she shouldn't have said?
She said it was well funded. It underpins our AAA credit rating. It was like an itch to me hearing that.
Why
was just why is this so important to you? And so I just wanted to see, how much money is in the Canada pension plan? So, quick Google search. Okay, there's about $570 billion in the pension plan. Canadians that are retired take out, I think it was something like $15,000 per year from the pension plan. I didn't run the math of how many people are retired and whatnot, and inflows and outflows. But I did find Fraser Institute did a study. So from 2008 to 2017. So, that's, I guess, 5 or 6 years ago. I
love these guys. I don't know who these guys are. I love the Fraser Institute, the stuff they put out.
Yeah, they're sort of a
is it like
libertarian leaning economic think tank, I guess, if you want to.
Yeah, I'm trying to figure out who funds their stuff. But anyway, go on.
So net contributions from 2008 to 2017. So net meaning, right, there's amount that goes in, plus there's also amount that goes out to the retirees who are drawing money from it. So Alberta net contribution for that 10-year period was $28 billion. Do you know what the next biggest province was that contributed?
Oh, no. I'm assuming Ontario.
Ontario. And could you guess the amount? If Alberta contributed $28 billion, what did Ontario? Just wild guess.
We should be much more, but I guess it's not. So I don't know. 30.
7.
What?
Yeah. $7
Why?
billion.
Because it's based off something with energy, oil?
Whether we have more retirees here, whatever it may be. Ontario, which is allegedly an economic powerhouse in Canada, contributed a total of $7 billion. BC, $5 billion. Manitoba and Saskatchewan, I'm just grouping them together, $4 billion. And the East Coast, so Newfoundland, Prince Edward Island, Nova Scotia, New Brunswick, negative about $6.5 billion. So they had net outflows. So now, if we take that math, and obviously,
and Quebec, you didn't mention Quebec because they have their own Quebec pension plan.
They do their own thing.
They have their own pension plan.
I guess so, yeah, they do their own thing. So now imagine by far the largest contributor, and again, these are numbers from 6 years ago, but Alberta clearly is by far the largest contributor. If they pull out and say, okay, we're going to manage all our own assets, we're going to manage all our own inflows and outflows.
Yeah, got it. Our unfunded liabilities.
So basically, all of a sudden now, there's going to be a net, it still would come out positive, but if we look at Canada as an aging country, which we are, all right, more retirees. Where's the money? Our economy is stagnating for a multitude of different reasons, whatever.
We're not good at innovation. We're not good at technology. We're not good at productivity in general.
We're really good at bureaucracy is what we're good at, but that's costs us money. It doesn't make us money.
And good at stuffing just a lot of people in the country without planning for housing, healthcare, or transportation.
Yeah. So in any event, you can see why, just looking at those numbers from a few years ago, they really need Alberta. And if the Canada pension plan falls apart and starts to really, it starts drawing down its assets, what are the net, what dominoes fall after that? And so I just found that very interesting, I guess. And so I said Canada is funded, but I was also thinking about, I had heard this story like 10 or 12 years ago maybe about the U.S. Social Security. So U.S. Social Security is different, right? It's not a funded fund that has assets. It's just, we promise to pay you. Do you know the story of the very first recipient of the U.S. Social Security?
No.
I swear I heard this. I think it may have been Peter Schiff who I heard this story from on his video blog a decade ago.
Oh my God, I think I did hear the story. They never or they made one payment. Yes, go on.
So a woman named Ida Fuller worked for a year when the Social Security program came into effect. She was a legal secretary. She retired in 1939. I think the program had started again that year or the year before. She paid during her final working years $24.75 into Social Security. On her first year in 1940 of retirement, she withdrew $22.54. So she paid in 24, took out 22 in year one. She lived from age 65 when she retired to age 100. During her lifetime, she collected nearly $23,000, having paid a grand total of $24.75.
I'm happy someone won.
Yeah, someone won the lottery with that plan.
Won.
Yeah, someone won the lottery with that plan. I just find that it just goes to show that is, in my mind, the definition of a Ponzi, the U.S. Social Security, because, okay, someone pays in the very first amount, the very first entrant, right? I pay in this tiny amount and then I just keep getting the payouts at the end of the day. And how does that plan sustain itself? Well, it's dependent on continuous growth. We must have continuous inflows to pay the ever-increasing outflows. And those inflows must keep growing. And if ever they shrink while the outflows inevitably also grow, you run into the wall. The Ponzi scheme collapses. And so that's Social Security in a nutshell, different from the Canadian pension plan. I'm not saying the Canadian pension plan is a Ponzi. I'm just saying it's...
I mean, we might if inflate, just think of your purchasing power that you get, I guess, of anyone who's 40 years old right now, the purchasing power of whatever they're going to get from the pension. Let's be realistic.
Yeah, no, I'm 39 years old right now. I'm planning to receive exactly zero for my lifetime in Canadian pension plan. That's my expectation. Or whatever I get,
We'll buy you a coffee.
Will buy me a coffee, maybe. But it's at the point, or it's approaching more quickly, it's accelerating to the point where the amount of inflows are, especially if Alberta pulls out, slowing down. The amount of outflows are necessarily continuing and will grow. Run the numbers, do the math. What's the end result?
How do you, disaster.
Yeah.
How do you reconcile, because part of me is like, you know what, cheering for Alberta. Pull out. Just pull out.
Oh, yeah,
But then how do you reconcile those friends of yours or those discussions that you must have with people that say, hey, Jesse, I mean, okay, look, that sounds nice, but it is a bit extreme here because, come on, there's these people that are about to retire that need to get these payments. I mean, you're basically cheering for chaos.
Right.
How do you reconcile that?
Have they not benefited for the last 30, 40, 50 years, right? Where all the upside, they enjoyed all the boom, the good times. And now there's the bad times. And so who should pay for that? Did they enjoyed the excess? Do they not have to have the come down and sort of deal with
some
the fallout
kind of
too? Or has, not to put it on, the generation before me or anything, but like, are they so coddled and, unprepared and so dependent that we should fund their graceful exit and then we get stuck with absolutely nothing? I mean, that's sort of what's going to happen anyway. And
Let's
I'm
put it
not
on
to sound,
you're a millennial, correct?
I think technically, yeah.
I'm a Gen X. I'm a Gen X. So let's put it on the generation above, beyond me. Let's go to the boomers.
Yeah, the boomers. Okay? Yeah, for sure. No,
because I feel like as a Gen X, I look at the boomers and then I look at the millennials. Yeah. And I just feel like I'm stuck between these two massive cohorts that are both kind of like yelling and screaming different things. And I feel like we're this lost middle here that is like, holy smokes, what is happening?
Yeah.
But I mean, that's just observation, doesn't really actually matter. Your point matters in that something needs to be done. I'm more of the rip the Band-Aid off type of person. Like, we can't just have this keep going.
But that's exactly it. It's, if we coddle the group that had all the benefits and we'll identify them as the boomers, and maybe that's, it's not any one person's fault.
No,
right?
it's
a systemic thing. I mean, we're not trying to place blame on any one or thing in particular, or anyone in particular. It's the nature of the system that has grown and become. They benefited from what it was. It is where it's at now. We necessarily have to deal with the pain. There's no escaping it. It's just, are we kicking the can again and again and again because we've already done it a bunch of times? Do we kick the can even further down the road, knowing that for every time we kick it down the road, the pain gets worse when we finally have to deal with it? At some point, someone has to confront the issues and say, okay, we rip the Band-Aid off, as you said. We deal with the pain, but then we can heal. And then we can grow and become better. And there's, it's just some pain now. And it hurts and it sucks, but we can build and grow and learn from that. Or we don't learn anything, we don't change anything, we keep pushing and going as we are, and then someone else gets to deal with the pain, but it'll be worse later. Anyway, sorry, that was off topic of the Bitcoin that we were starting with.
It's like but it's all related.
But it's all related, yeah. Like, that's why Bitcoin is going up in effect.
I can see the next cycle here, the next economic cycle, the next crisis that hits. And I feel like sometimes within the next 12 months, we get some kind of crisis at some size. Like, I don't know, is it the size of the pandemic? Is it the size of the great financial crisis? I have no idea, but it does seem like you can kind of see the writing on the wall. And then the policy response to that is going to be, we know, print money, QE, however you want to call it. And I can sense that we might survive, the system might survive through that one. But I feel like the acceleration that happens, or the accelerated path that we're on now, is like, it might survive through that one, but the next one comes super quick.
Every time we've already been living crisis to crisis now for a few years, right? We had the great financial crisis. The policies, quantitative easing, money printing, low interest rates that came out of that basically bought us a decade. We got to 2019, 2020, when the underpinnings...
Things were starting to break.
Foundation
Fall of 2019.
Yeah. The cracks were starting to appear. The foundation was starting to shatter. And so COVID comes, and we, however that came, and the whole story, we're not going to go into that here, but it wound up becoming a great excuse to, hey, we're going to print a whole bunch of money. We're going to take on a whole bunch of debt. We need to do this to keep things going, blah, 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 blah. Okay, that's a crisis. That started to fade. The convoy sort of put the end of that, like marked in effect the end of that, or the beginning of the end of that. And okay, well, we need a new crisis until the Ukraine war comes along. They got a year and a bit out of that. That's
gone.
Suddenly,
I feel like it's just vanished.
It got memory hold is what happened. It got memory hold, right? It's just popularity, support for that cause was fading dramatically, right? Everyone had their sort of Ukraine flags in the bios, and now the whole counteroffensive, that was sort of the last big push that was made. It apparently didn't really go anywhere. We were told for the last year and a half, Ukraine's got this in the bag, Russia's weak, and now there's talk of, well, we need ceasefire and peace talks. It's like, yes, the people who never wanted to go to war because war is awful and destructive and like harmful both to humanity and economically and socially, we're saying, hey, like, let's find peace. There were peace options going back before the Ukraine thing came to the forefront to begin with, whole other story. But regardless, that was losing its steam, and now we have Israel-Palestine. And obviously, I don't want to go into that whole conflict, but it's like we keep going from crisis to crisis. We can, a skeptical person might go, well, the timing seems to be coincidental, and maybe there is, and maybe it's not. Maybe it's just the incentives and nature of the world. It just seems to find itself jumping from one thing to the next. But it's problematic. We have no stability. We have no foundation of just like building anymore. It's just managing things that are falling apart.
And it feels like human nature, there will always be human tribes fighting each other over something. But then it also feels, when you layer in some sort of central planning, central banking that almost uses that natural thing to its own kind of manipulated advantage. So
there's lots of ways where it's, you can see how the people in different power positions, again, whether it's in Ukraine, whether it's in Russia, whether it's in Canada, whether it's in the US, whether it's in Israel, whether it's in Palestine, whatever. The key sort of power players seem to push the wrong buttons, and those buttons tend to lead towards, consolidated power for them, less for people, less focus on human flourishing and human prosperity, more focus on protecting some kind of vested interest one way or the other. And that's the opposite of what we need, obviously. So how we get away from that, obviously we'll talk about Bitcoin fixes this. And, you mentioned Jeff Booth's presentation off the bat. I hadn't heard this particular angle from him, but when he talks about Bitcoin,
he was pretty serious in that talk.
Oh, it was amazing. I loved it.
It's on the YouTube. It's on the Rockstar YouTube channel, by the way, if you want to catch it. He had never done that particular presentation before, and I thought he was a more serious Jeff than I had seen. The way he depicted, envision just the current world we live in and its sort of crumbling foundations, in effect. And then, we recognize that we need to get to this other side where things are different and better. And so how do we get there? And he sort of depicted Bitcoin as this bridge over this, crumbling society over to the next one where it'll be built on strong foundation and built tall and beautiful and whatever. And that's a very simplistic take on his presentation because he went into a lot more detail and a lot more things than that. But I found that analogy very compelling. And I think it's interesting. I guess with Bitcoin where it is now, I started kind of paying attention to it because of the price of it. But as you kind of go down the rabbit hole of Bitcoin, you just come to appreciate it at so many other levels. The price is just this one factor to it that doesn't really, this is going to sound silly almost, but like it does matter. But like the fiat dollar price of it is just this one component to what Bitcoin represents to me personally. Like maybe not to other people, I can speak to myself.
Yeah.
To me personally right now, that it's just like this. It opens like your eyes into what could be possible. And I like the way Jeff broke it down when he said, there's a new world emerging that is measuring the rest of the world already.
Yeah.
And he used an example of I think it was his lake house. And he said, when I first priced my lake house in Bitcoin, it would have cost a few years ago 300 Bitcoin to purchase that lake house.
Yeah.
Today, if I purchased that lake house, it would cost 50 Bitcoin.
Yeah. And that's a shift to be able to start thinking like that, right? That's a difficult thing, especially if you don't have Bitcoin, you're never going to do that. But once you have Bitcoin, especially if you've been in it for a little while, you've held it, you start to understand the nature of how it works and why you might want to use it. If you can train yourself to start thinking in terms of, okay, well, dollars are not a good measuring stick for value. Why are dollars not a good measuring stick for value? We'll give you a very simple example. I have $10,000 in the bank account. There are $1 trillion in the Canadian economy, right? Just very round numbers here. So that's 0.001% of all Canadian wealth, whatever the number might be. I might wake up tomorrow and suddenly the Bank of Canada says, oh, you know what? We got a new crisis here. Today, there's $2 trillion in the Canadian economy. We printed an extra trillion. We're going to disseminate it through the banks. They're going to give out a whole bunch of loans, do a whole bunch of programs, and we're going to pay a whole lot of bureaucrats to do a whole lot of nothing. My relative share of wealth, 10,000 divided by 1 trillion, is now 10,000 divided by 2 trillion. My relative share of wealth has been cut in half. Why would I measure my wealth when the measuring tape is consistently adjusted and always for the worse? Or certainly it trends over time always to be for the worse, where if I have my share, it's constantly being diluted. If I measure in Bitcoin, I have a stable measuring stick, that 21 million, that amount never changes. But what it can purchase, that changes. Rather than the value going down, because of the nature of Bitcoin, the value happens to go up. And again, there's a million reasons for that. And Jeff wrote about it and I wrote about it and whatever. But when you start thinking in those terms, you start looking at the world differently. Well, okay, if I have, my $10,000, because of the nature of fiat, because I know it's going to get devalued, I try to spend it and get sort of commensurate value for it as soon as I can, or invest it in something that I think is going to deliver me returns that'll keep up with the depreciation. Whereas if I have Bitcoin, I can just save it and I don't have to worry about the depreciation, because over a long enough timeline, I'm of the opinion, for a variety of reasons, that the purchasing power will increase. Again, the volatility is more of a short-term thing. But now when I spend, it's okay. I could buy that house, that lake house, for 300 Bitcoin today. But if I wait a couple years, I could get it for cheaper. And then it becomes a matter of, how many years do I expect to live? How badly do I want that lake house? How many other Bitcoin do I have? So if I spend, I still think I'll have enough for all the other things I might want to do with my life. It changes the nature of how you do economic calculation.
It's wild.
Yeah.
And the next year brings all these things, which is what I want to talk to you about, this whole ETF thing.
Yeah.
But next year, when you think about institutional demand may come in, which I actually don't even care for. Like, I'm just one of those ones that I don't even want the institutional demand. Like, sure, I guess it'll pump the dollar price of Bitcoin, but I don't care for it. But there's institutional demand that looks like it's on the roadmap and there's coming. There's basic things like, I think Michael Saylor led the path to the accounting change in the U.S.
Yeah,
U.S. corporations.
FASB or something.
Yeah, where like if Bitcoin drops, it's not treated as a commodity on the books in some way or some capacity. I'm speaking a little bit out of my depth here, but if it can be marked to market essentially. So if the Bitcoin price adjusts, goes down and back up, on your books, you don't have to keep the lowest dollar price. You can kind of mark it back up. So it makes it a little easier for treasuries to put it on their books. So you got institutional demand. You have that. You have the halvening, which is coming up, which not only to me produces half as much Bitcoin as is being produced currently, there's less sell pressure to me as well. And I don't know if you think this way, but if the miners who have a lot of capital expenditure to build out their mining facilities sell Bitcoin to fund it, if they have half as much to sell, there's just less selling pressure too.
It's a natural forcing function for the increasing purchasing power of Bitcoin, right? The fact that Bitcoin gets more scarce over time. If I'm a miner, which I'm not, but if I was a miner, I plan, you pay for the most part everything in dollars. And so the last couple of years and probably the last couple of months, okay, you see Bitcoin doing its thing. It's starting to move up, especially the last 2 months. Okay, how many dollars do I need to sustain myself versus my income at today's price? And then you start projecting into the future and you have to understand, okay, well, I'm going to have my income in Bitcoin terms is going to get cut in half. Does the amount of Bitcoin I earn based on whatever dollar value I'm receiving, can I sustain myself on that? If not, either the industry gets into a pressurized situation where maybe some guys go under, or the Bitcoin price adjusts and that offsets the reduced real income of Bitcoins they receive, but the nominal value of that Bitcoin in dollar terms, if that goes up, well, now they can keep sustaining themselves on less real income, if we're calling Bitcoin real money in dollars, sort of the nominal fake money. Yeah. So
just that line you just said, my income gets cut in half in Bitcoin terms. Like next year, this happens.
Yeah.
That if you're earning dollar-based income in the new production of Bitcoin that's coming out relative to your income, it's a real big shift that's about to happen. There's half the supply that's going to come on. You're going to be earning the same income, but there's half the new amount of Bitcoin coming on.
Yeah. So if you're a miner, today's price Bitcoin is roughly 35,000 US. How were you doing when Bitcoin was 17, right? How were you surviving when Bitcoin was 17,000 US? Because you're basically going to be back in that situation in a couple months, assuming all things stay the same, which obviously they won't. But you have to start thinking like that. But then you bring in retail demand and the money printing and the debt that's happening in the background, and you have all these events and an environment.
Like 2024 to me is just like a buckle up year. So I just want to get your thoughts on this whole thing. Like with the ETFs that are about to get announced, I don't know, next week or by February or whenever. If a company like, I just think of the gold ETF and how much it bothered me when I first got into gold and became like a gold bug. Like in 2008, when I went down this whole central banking rabbit hole, I became like a gold bug. I was like, holy smokes, I'm going to get real estate in gold.
Yeah.
And gold went on this nice kind of run until about 2012, 2013 or so. And then it just kind of flattened since then. And now it's having a tiny bit of a renaissance or whatever. But during that era, there was this whole thing that I looked into GLD, the biggest ETF. And I'm like, do they really own there was all these theories of like, do they really own the gold they say they own? You're just buying this stuff. And it just got me thinking that like, I wonder if the original announcement of the ETFs do really drive the price of Bitcoin for a little while, but then longer term, maybe a year, 2 years, 5 years, whatever it is, does someone like a BlackRock control so much Bitcoin that they then can, I guess, collude with others to manufacture a price, throttle a price, suppress a price of Bitcoin. And it's got me a little bit like, shit. I don't really know if I like this institutional kind of demand. There's another concern with it that doesn't really bother me, but bothers some people, that when the ETFs come out, you could see a world where the governments say, hey, Jesse, if you are going to own Bitcoin, you have to own it within the system. If you're custodying your own Bitcoin, that's for criminals. The only way to hold Bitcoin is to put it back into the Canadian banking, system through an exchange. And as of December 31st, 2024, you're never allowed to custody it. You have until then to move it on board. That one actually scares me less. But this whole one of the ETF controlling huge amounts of Bitcoin, what's your thoughts on that? Have you thought about it a little bit? Do you care about that?
No. I've thought about it a little bit. I'm not as scared about it. And I think part of the reason has to do with, if you remember the block wars or know about the block wars from 2017, right? Where a few miners, Bitcoin entrepreneurs, exchanges, right? They wanted to call it dictate certain terms to Bitcoin. Say it was the block height. They wanted the amount of megabytes or kilobytes that would be in every block. They wanted to change it so that they thought they could pack more transactions into each block, and they thought that would solve air quotes the scaling issue. Sorry, that I should put scaling issue in air quotes. That's an issue, but it's an issue that I think has solutions. You had an example of a group of very, very influential people who controlled a lot of Bitcoin, a lot of mining power, and just a lot of influence in general, I would say, in terms of they had been in the world of Bitcoin for a long time. They were known entities and players who were sort of, Bitcoin celebrities of that time, to some of them to some extent. Their venture, their objective, they failed basically at what they tried to do, and it killed their credibility. I think about that possibility of like a BlackRock as, okay, you know, we talk about financial institutions in general and the financial system in general, its credibility is weakened and weakening with all the different measures they're taking, right? I saw there was a, you know, RBC, I think, is reducing the amount, the Interact limit. You could not Interact,
that's
your
right.
e-transfer limit, right? There's all kinds of ways they're trying to squeeze people to say, you know, your financial transactions, you can do less and less and less with more and more oversight. We're making it more burdensome, et cetera, et cetera. That's them, in effect, reducing their own credibility. So when I think about the ETF, I think about it similar to that. If they were to try to, okay, we're gonna hurdle people in, we're gonna say, yeah, you know, buy Bitcoin with us in the ETF, because that way, you know, in your retirement account or your TFSA or whatever, you can have Bitcoin, or if you're in the States, your Roth or IRA or whatever it's called. I don't know much from the US.
It's safe. It's a safe way to do it.
It's a safe way to own Bitcoin. What it really is, though, is, you know, we used to work in investment management. It's, as an investment advisor, I couldn't say to a client necessarily, hey, go out and buy Bitcoin, because if you do that, you're going to take money off of my books. I make money on fees, right? If I have $1 million, you own $1 million of assets. If you keep $1 million in my book, you know, I make whatever, 0.5% or whatever it is on the fees. If I say, you know what, you should have 10% of your assets in Bitcoin, well, $100,000 walks out my door. Now I'm making, you know, my percent on 900,000 instead of $1 million. I want to make my money on $1 million. So advisors couldn't advise people to buy Bitcoin. An ETF makes it so that they can. It gives the traditional financial system an excuse to actually start getting into Bitcoin. I don't think we're going to see, you know, people saying, oh, well, now I'm going to keep the people who have stored their Bitcoin in cold storage say, well, now that the ETF is here, I'm sure glad I can store my Bitcoin with a bank. Like, I don't see any real Bitcoiners doing that. I think when I should say if, whatever, but let's assume price goes up in the future for a host of different reasons. Obviously, some people are going to sell, but there's someone on the other end of that transaction buying. I think people have done different math analysis on this, but there's like, you know, 12 or 13 million Bitcoin that are said to be basically off the market in cold storage. Those are basically almost never going to come out of storage. There's 2 to 3 million that float typically on exchanges, and that number has been dwindling. And there's a few million that are lost. And so if we're saying the ETFs are going to come in and they're going to start competing basically for that 2 to 3 million, and if price goes up a lot, okay, we're adding another million, but that's not necessarily a million that's going to go all to the ETFs. It's going to go partially back to some holders who still are going to keep buying at any price, like Michael Saylor, who's just, I'm buying at any price. I'm going to buy every top forever. That's what he said. And he's right. He should be. And we all should be. I don't see it so much as the BlackRocks and the Vanguards can then swoop in and try to change the rules of Bitcoin. That's not to say they won't try. They could try. But they would just end up shooting themselves in the foot the same way the big blockers did with the block wars. And all of a sudden, and then people would say, you know what? Don't want to deal with you and your ETF anymore, and you guys don't add any value, and Bitcoin's value proposition is not to have custodians anyway. And also now we're a couple years down the road, and you know, wallets are easy now. We can download on our phone. It takes 2 minutes to set up a phone with a private key. It's nothing. It's really easy to do now. It's going to be even easier.
Will get easier.
It'll get even easier, more common, more understanding.
How easy a Blue Wallet is right now, just on your phone. Like now, it's just ridiculous.
And it works.
Yeah.
And if you lose your phone, you can still have that private key and get access to your coins on a different computer, on a different phone, on a different device. So long as you have that key, and they tell you, this is your key. Don't lose this. Write it down. Don't lose this. It's very clear. So I'm not overly worried, but that's also because I'm thinking that the game theory will play out the same way it's played out over and over again with Bitcoin, where yes, someone always wants to come in and co-opt it or manipulate it, but they can't. And it backfires because that's the way Bitcoin has managed to be set up. And if Bitcoin is going to be what we expect it to be, that has to happen. It's going to have to. That has to happen, because if it could be co-opted and the government says, everyone's got to.
It hasn't accomplished what we wanted to accomplish.
If everyone has to, have whitelisted coins and it has to be tracked on your bank, then it's not Bitcoin anyway. Then it's nothing. It's not serving the purpose it was designed for. And I think enough people that hold Bitcoin and buy Bitcoin and care about Bitcoin know that and understand that and are doing what they can to practice that and improve their practices as they do it. Like I see people in the Bitcoin world all the time. Hey, you start with a wallet, and then okay, well now I want to have a node and a wallet. Okay, and then I want to have a node and a wallet. I'm going to do my own multi-signature scheme, and then I'm going to do coin joins so that I can make my transactions more private. And you just keep adding the layers and improving how you do things with Bitcoin. And I mean, I see that happening, and that's for some of the people that we know that are really into it and getting it. But the deeper they dig, the more they can tell other people, hey, look what I found. I found all this stuff, and that knowledge can proliferate, and people will practice it, and it'll become easier to do. Yeah,
I feel like, when I first got on the internet, I had to like break open my desktop computer and stick in a modem and like install some firmware, or update the firmware of the modem, and then connect it to a phone line and have like this dial-up account to be able to connect to the internet. And I just feel like now people open their iPhone and they're connected to the internet, and it's that simple.
And it's nothing.
And Bitcoin's just going through the same process where like the hardware wallet kind of sort of still feels a little bit like the early internet of like, hey, I got to like get this thing working. How do I do it? What are you talking about? Seems complicated, but you can extrapolate out just like 36 months and you see it. And then something with like a blue wallet is so simple. I want to ask you about your favorite or preferred hardware wallets in a second. Somebody published this chart up here, and it said, on the ETF, if you put in like, a Bitcoin in the ETF at a 1% fee over 30 years, you lose about 27% of your value just from a 1% ETF fee. So like if you bought like, $100,000 or $1,000 or $100, whatever it is, and just left that Bitcoin in that ETF, just the 1% fee over 30 years, because you were buying it, you said, you said you're 39 and you wanted it at 69 years old, you're actually going to lose 27%. You might as well just take custody of the Bitcoin, because you don't need to be paying anybody 1% to be holding your Bitcoin. But when you see it like that on this chart, and I know anyone listening to this, you can't see the chart that we're pointing at, but that's just astonishing. 1% over 30 years, you lose about 26% of the purchasing power of your Bitcoin.
That's the same sort of analogy that, the Robin Hoods or the Quest trades or whatever that they use. They said, oh yeah, you could pay your mutual fund manager 3%, or you could do your own trades and it'll only cost you, this much, and this is how much you'll save. It's the same idea, right?
What is your favorite hardware? Do you have like a hardware? And the reason I'm asking you that is there's a whole bunch of rock star people for sure that own Bitcoin, and they've been coming to me over the last few weeks specifically. I think the price is moving a little bit. People are talking about it again, and they're saying, okay, Tom, I really need to get a hardware wallet. Like I don't want to, kind of whisper it. I don't want to admit to you because you've said this for a long time, but my Bitcoins are an exchange. Where do you tell people to go first? What's your preferred hardware wallet?
So preferred would be Cold Card, right? Made in Canada. Just so happens they're made in Canada, but they happen to be basically the best dedicated Bitcoin hardware wallet. Some might say it's a little more technical to use. It's really dummy proof though. Like when you open it and power it on and set it up, it walks you through the steps. You can't really mess it up. There's tutorials online. It's super, like it's very doable for, if you can use a cell phone, you can manage to, or a smartphone, I should say, you can manage to use a Cold Card. If you want something that's more dummy proof, the Trezors and Ledgers of the world, they're not my favorite because you can buy all kinds of other shitcoins with it. And so by nature of that, they have to be able, the software, the firmware has to be able to accommodate all kinds of other stuff. So they're not as focused on the security as a Cold Card is. Like Cold Card is a very powerful tool. It has all kinds of functions that those other ones don't have. But for the average retail person who just wants something simple, you're better off having a Trezor or Ledger, even if it's a little easier to use in a Cold Card, than leaving it on an exchange, without question. So those are options for you.
And I think the key on that is that as long as you secure your seed words, doesn't matter what happens to the hardware wallet, really. As long as you've secured those words, you can buy another hardware wallet, get those words back out, and then restore access to your Bitcoin using those seed words. So anyone who's thinking it might be complicated, it comes down to securing those seed words. Is that?
No, for sure. The seed words are effectively your Bitcoin. That's the literal key you stick in the lock, and any computer can be your lock. You can download a new lock anywhere in the world and then just turn the key. So yes, having those words is the most paramount thing. All the devices do it for you. The difference between a Cold Card and maybe a Trezor or Ledger is Trezor and Ledger, you would connect to your internet connected computer while you generate a private seed or private key. And so theoretically, even though the seed is generated on the device and the device has is technically somewhat separated, maybe somehow, some crazy way, far-fetched way that really hasn't quite been discovered, someone could steal your seed. I don't think it's very likely. The only way that either of those two devices have been hacked is when they're physically compromised. With a cold card, you can generate your private key offline, meaning I could plug my cold card into a wall or a battery, and it'll generate my private key. And it's not a Bluetooth connected device or a Wi-Fi connected device. So I've generated a key completely absent the internet that has never, and you can use it in such a way that it never even has to touch the internet. So anyway, it is the superior device in my mind. And then you connect that to software, right? You would download, whether it's Blue Wallet, whether it's
Sparrow.
Sparrow's a great one. Wasabi, whatever. There's a whole bunch of options. You could connect the hardware to the software.
So I started with
a
Nano, and now that I'm in the cold card,
which is in the Ledger family.
Sorry, yeah, the Ledger Nano X, is that the one?
There's a couple different Ledgers, but
the cold card is really cool because I had never used the Sparrow desktop.
Yeah,
and that desktop software that is kind of like how I'm interacting with the cold card device.
Yeah.
And, cold card signs the transaction.
Yeah.
And the Sparrow wallet's kind of like my visual representation on my desktop of like what's happening. But I didn't realize that it had this like UTXO thing where it kind of like really specifically shows you what's happening with your Bitcoin. And I guess maybe this is way too technical for most people, but to me it was like, I was just kind of geeking out. I'm like, this is wild. Like I'm actually understanding under the covers of Bitcoin at a better level because of this device and forcing me to use Sparrow. I really appreciated seeing all this stuff. I just learned how Bitcoin works at maybe a more deeper level.
Yeah, it helps you visualize it a little bit better. And Wasabi does a similar thing, where you can label each transaction and you can...
Oh, okay.
Yeah, so like...
And Wasabi's like a desktop? Wasabi?
Yeah, desktop.
Oh, I didn't know that. Okay.
Yeah.
Okay.
Sparrow is very comparable, and Sparrow is excellent. No, like I like Sparrow a lot. But yeah, the fact that you can label each transaction as it comes in whenever you generate a receive address.
I love it.
So you say, okay, this I received for this. I sold a book. Okay, this person gave me this, and I got for something else. I'm receiving. You can label them all, and then when you spend, you can choose, okay, I'm going to spend from this side or the other. And these are like, if you're caring about your privacy or who sees the history of your transactions, like, okay, I don't want them to know that it connected to this one, but I can let them see from this and it's this amount or that amount. Anyway, that's a whole rabbit hole.
You could spend a lifetime.
UTXO management, unspent transaction output management, is a whole sort of field.
And you don't need to go into it. You don't even need to go into it. Other than
this is several layers deep.
Too deep, maybe too deep. But there is this one point on UTXO management that's getting a little bit interesting to me, is that some people are anticipating the price of Bitcoin to go up, and that fees are going to go up. And there's just this talk of like, hey, you better do some UTXO management because as the fees get really high, if you have these small UTXOs, you might have a problem that you're just going to have this Bitcoin that's locked up and it's unusable. And I don't know if I'm articulating this properly, Jesse. Can you talk about that just a little bit?
So that's, I would say, maybe a little bit more out of my depth than the
But
technical.
Have you heard this discussion?
Oh yeah, no, I've heard that discussion for sure.
Do you do any UTXO management yourself yet?
Not a ton. Okay. I'd say I don't want to go into it, but not a ton, let's say.
Okay.
And that's not, it's something that I think a little bit about, but I'm at the point where, so I have an MK3, which is the cold card from a few years ago now. They have the MK4 is the current one, so sort of an updated version of the MK3, and they're coming out with the Q1. So the MK4 and MK3 and the previous MK models, they look like little calculators, and they're much smaller than you would think.
Yeah.
It's like the size of, if we're on video, sort of the size of this thing. That
That's a full Bitcoin you're holding in your hand. That's a real Bitcoin.
You can see it in my hand.
I was going to give you that as a gift. Okay?
This is it's a full Bitcoin.
Actual Bitcoin.
Thank you. I'll put it in my pocket. That's the size of a cold card, basically. But yeah, the Q1. So the MK series looks like a calculator. The Q1 looks like a BlackBerry.
Yeah.
Kind of, you seen that? Like
the pictures,
just for like, if you're going to regenerate your seed on a device, typing on a full keyboard is a lot easier than the numeric thing. It'll also have a camera, so you can scan QR codes, which you can't do right now. So it's going to have a couple new features. I think it's coming out in the new year, early in the new year. So I'm probably going to get that. When I do that, then I might do some UTXO management, because then I'm going to move around.
And then, and what's your prediction, I guess, over the next little while of what's going to happen in the U.S.? I mean, Luke Groman has this awesome chart. Actually, let me show you this chart, because he has this chart where he kind of shows the U.S. deficit. And he basically, I'm going to put this up on the screen, then we can kind of outline it for anyone listening, is he has this chart. Let me see if I can make it full screen even. He has this chart that basically says the current deficit in the U.S. is about 7% of GDP.
Right.
So it's currently about 7-8% of GDP. And then if we're hitting a recession, every time the US goes into a recession, the deficits increase by about 6 to 12% of GDP, which would mean that the US deficit, if we are going into a recession in the US, is about to hit 14 to 20% of GDP.
Sure.
And so the amount, I know. And so the amount of not only money printing coming our way, that interest rates going forward, they might be in a world where, we're going to go into a world of higher rates than maybe we think is normal. And I think Luke's thinking around that is that if you have this much money printing, the bond market's really just not going to be able to stay at a relatively lower rate to today. No. And it's going to be at a higher rate. Even with something like yield curve control, we might be looking at rates of like 12% and inflation of like 18%. When you see, I guess I'm preaching to the choir.
Sorry, no, I'm still listening. Sorry, I'm nodding along.
But when you see this, because like he's just showing the math, like we really are in the current state of the world, the U.S. really is at this much of a deficit, and historically, 6 to 12% or 6 to 12 points of GDP get added during a recession. Like the next U.S. deficits could be astronomically large. Interest payments are about to hit $1 trillion on an annualized basis, and the Canadian dollar has to stay cheaper and less expensive than an American dollar, which means we have to have lower rates than they do or pump more money into the system. I mean, when you see that, what comes to mind?
It's all falling apart. Get out, buy Bitcoin. That's more or less what comes to mind. This isn't the real world. When I look at this isn't what serious people do, right? Just spend ad infinitum, right? Just spend it to eternity. This is not this is a clown world issue is what it is. Economically, I think it's all a joke. Like it's a sick joke that they're playing on us. And for the most part, we've been playing along. But now I'm happy. I don't pay attention anymore because I'm almost like, okay, I'm done playing your stupid game. Mm-hmm. Obviously, there's a lot of money riding on it, so people have to do this analysis. And it's not to say it's not important, but maybe it's not that important. Mm-hmm. I don't know. Sorry, that's probably the answer you were thinking you were going to get.
No, you're right. And I just think it's an important thing for people. Like we play in the real estate world a lot. So if you're holding property, your biggest variable is really the interest rate. You can kind of manage vacancies. You can manage maintenance. You can plan for expected maintenance. What you can't plan for, especially in Canada with 5-year renewals, is you can't plan for interest rate movements by the central bank.
Yeah.
And I think most people have accepted that interest rates are going to come down. It's kind of like interest rates are going to come down. And I could argue that they are going to come down. Like I can make the case
for sure.
Because holy smokes, things are kind of breaking. They got to bring rates down.
Yeah.
The mortgage renewals in this country and in the US really require lower rates. Otherwise the banks...
Hey, it would also make Justin Trudeau look good if suddenly things got more affordable when election time came around.
Election in 2025 or whenever he would call it, starting to look good. The US is going to an election cycle.
Yeah, so maybe they drop rates.
Coming down. But then I can see a world that has low rates for a little period of time because of all these factors.
Yeah.
But then quickly thereafter, I can see a rebound of both inflation and higher rates, maybe both to higher levels than today.
Yeah.
And I think that's what people are not prepared for.
Yeah, I can definitely envision a world where rates are far beyond where they are today. Again, we're talking several years out, most likely.
Sure.
But it doesn't have to be. No. It could be in the short term. But, Argentina had 50% interest rates. I think they have 100% interest rate right now, or maybe that's Turkey or something. But in any event, there are countries around the world that are, somewhat respectable, I guess, economically to some degree, that deal with these very high rates. Canada's been in a fortunate position where we're sort of the baby brother to the US that just, we get to walk in their big footsteps and follow their path, and it's made things somewhat easier. But we're going to go down before they're going to go down. And I'm not talking about rates. I mean, just economic decline.
Sure.
And in that situation, I mean, they've basically shown that when inflation rears its head, they look to interest rates as a tool to try to control it. Not that it's going to control it, but that's what they think it does. So yeah, we can definitely see much higher rates than we've ever been accustomed to. And we had high interest rates, right? In the 80s, right? My parents had the 18% mortgage at one point.
Mine had 16.5.
Yeah. So it's not, and that was, we were in a much better economic situation at that point. So if we get into a much worse debt to GDP ratio, all kinds of other factors, why not? Like bust out of your, bubble of, it's been this way, and so it's going to keep being that way. No. Don't think like that.
So let's break out the crystal ball. I say next year, 2024.
Yeah.
Election in the U.S. is a big deal.
Oh yeah, huge.
So they're going to me, the powers that be in the U.S., the central bank, the treasury, they're going to stimulate the U.S. economy. They've tried to keep rates super high to me for as long as possible.
Yes, I agree.
To try to control inflation.
Yeah.
Knowing that next year
they're going to need to cut.
They need to cut. They need to have some fun.
Yeah, to appease everyone.
Yeah, they need to throw some money. They're going to say how great the economy looks. And I just feel that movement might get out of control and bring their inflation roaring back that really hasn't been quelled entirely. Like, it's come down a great deal.
Sure.
I'm not going to argue that it hasn't. If we just look around at the economy, definitely things have slowed down.
Yep.
So things are increasing in price, but maybe the rate of change has come down.
Yep.
But then after 2024, I feel like they're not going to be able to keep a lid on things. And the repercussions of this next liquidity movement is going to be a little sketchy for them to get out of. And that's where I can't see past that, because 2024 seems logical to me. Lower rates, throw money, asset prices go up, maybe the Bitcoin price pumps,
Yeah, I agree. Like, just sort of trying to be rational and say, okay, this is, if you were, in that power seat, and what do I need to keep, my grip on power, and to appease the people to such a degree, to placate them just enough, right? What do I need? Yeah, that makes perfect sense. Will that actually play out? I mean, obviously we don't know, but that seems like it could very well be the playbook, especially they've done it aggressively, raised it so aggressively. If you think of it just like trying to visualize the chart, right? Nothing goes up in a straight line.
No.
So if we've just had this big thrust upwards, then sure, you can see that dramatic pullback. Not that it's going to go all the way back down, but you could have that 30% retrace, 50% retrace. And you do that for a few months or 6 months or a year, probably not a year, but you do that for a little while, and that sort of buys you that little bit of time and goodwill just before the market does its thing again. I could see it. I could see it playing out.
Jesse, who wins the next U.S. election?
Oh, I have no idea.
Come on, give us an answer. You don't follow this stuff. Who wins it?
No, I have no idea. Is it a fair election or is it a rigged election?
It is what it is. I don't know if what's fair or rigged. I don't even know what's real anymore.
I don't know what's real anymore.
Who wins the next? What about this? Who wins the next Canadian election?
Nobody. I mean, we all lose as Canadians with the next election. Same with Americans. Nobody wins. There may be a politician who wins, but we're not going to win.
Where are we in the fourth turning pattern? That cycle of the fourth turning?
Yeah.
Where are we there?
I mean, I'm not I'm familiar with it in from a bird's eye view. I'm sort of that jack of all trades, master of none type, right?
But let me ask you this: you can see that going forward, there's
change happening.
There's change. When do we get to a point where some stability, or maybe to use Jeff's language, a bit of a bridge gets built that offers a new system in a real way to people? Are we here for a turbulent time for the next 3 years, 5 years, 10 years?
Yeah, I'm hoping not 5 years, but it could easily draw out that long. I wanted to mention something. We were talking about the ETF before, and I promise this is going to be somewhat related. one of the points that I had saw online, I think it was either yesterday or 2 days ago, Hong Kong wants to come out, right, with an ETF, right? Crypto Hayes, Arthur Hayes had posted this. Yeah. And, you talked about, okay, sort of ETF as this sort of potential financial capture tool. But what this flip side that we didn't think about it was, but it also was like a warning that went up in China where they go, oh, shoot, like Americans are going to have quasi access to Bitcoin and crypto. Well, we need to compete with that. And you have this sort of nation state game theory playing out where they're saying, well, we're going to maybe have spot ETFs. And so, sure, that
gives me hope.
And so when they now are in effect sort of openly competing, or at least there's talk of now we have to compete about this, all the detrimental stuff, Bitcoin going up fixes a lot of that, because now the purchasing power of Bitcoin, if you think about it, it's instead of grifters and politicians who they didn't earn the money they spend when they spend on pork belly programs, right? They make it up. They just, oh, well, we want to spend on this. And then Christy Freeland goes, yep, let me drop a budget. And just makes up a bunch of numbers. And then, okay, well, we don't.
Companies, did you hear that Senate hearing?
Yeah, of course, right? So all this nonsense, okay, we make up a bunch of numbers. And then, oh, well, the budget didn't balance itself like we hoped it would. So the Bank of Canada is going to step in and finance the rest of it. And we're going to say we don't finance it, but that's because we're buying it in secondary markets, whatever, blah, blah, blah. I had a funny thread on that on Twitter a while ago. Sorry. Anyway.
Hong Kong.
Coming back to Hong Kong. So instead of the politicians and the grifters and the collectivist parasites having power and purchasing power, Bitcoin going up transfers power to the nerds and the tinkerers and the innovators and the people and the builders. And so that competition that's playing out at that nation state level translates to returned purchasing power and economic power, and therefore influence, to the people who actually build things. And it's not to say that all Bitcoiners build things equally and whatever, but generally speaking, there's this understanding that, right, proof of work means put in work to get something done. There's no freebies. And so if Bitcoin goes up, okay, well, you can print all the money and devalue things, but we're still going to be able to get stuff done. So all this to say, Bitcoin is a counterweight that is somewhat unexpected, and the game theory, again, it's like, how is this all going to play out? And we just brought up the Hong Kong example of, oh yeah, that changes the nature that we initially thought.
The El Salvador example. Remember how it was only like 2 years ago, I feel like the IMF was saying El Salvador is financially ruined because of them going and allowing Bitcoin to be a monetary good inside their country. They're going to denominate some of their debt in Bitcoin or issue some new bonds in Bitcoin. This is horrendous. They're going down. That one professor at some university was just ripping on them forever. Of course. Now their credit rating in the last few months is
they're paying down debt. They're paying down their debt, right?
They're paying down their
in advance early. They're paying down some of the 2027 debt.
Debt free. Yeah, they're to be on the path to be debt free. I mean, so you can just see like that's an incredible change. I'm surprised we haven't seen more nation states just jump onto that bandwagon.
I think it's slowly percolating, and there's a lot of stuff that goes into that, right? El Salvador just happened to be in this tiny. It was very unique in this little sweet spot, this whatever. But yeah, coming back to what we were talking about before about the sort of stability versus the instability accelerates, but the instability fuels the stabilizers, like the stability builders in a sense, because the more instability they create, the more power they're giving away, and the people who are taking the power back are the people who create stability. And I'm talking about Bitcoiners, right? In that sense, because again, if my Bitcoin, instead of being worth $35,000 like it is right now, US, if it's worth $250,000, well, I can do a hell of a lot more with it if I want to deploy it, if I think it's worthwhile. I can actually start creating value for others, whether it's building a business and, investing to build a business, building real estate, whatever it may be, right? There's a million different things. So I think that the counter force, the bridge that Jeff talked about, it's already there and exists. People are already taking it and using it, and its impact and influence is obviously not well understood at a wide scale, right? General financial market analysts, right? They have no clue what Bitcoin really is and what it really is going to do to people, and how it's really changing things. But it's changing things without question, and it's going to change people, and I'm trying to give credit to that.
No, but you're right. Actually, when I think of what you're saying, is it changes someone like myself, even because the way I'm going to deploy my capital going forward, there's a couple things. If I am saving in Bitcoin and I believe what it is, I'm going to be really choosy in what projects I decide to fund.
Yeah, well, you only have so much Bitcoin, and it's hard to get more, right?
And then the project that I'm going to fund, it better look like it's going to have a great return or have a great and to have a great return, it's got to produce a lot of value to society.
Yeah.
Unlike now, where you could have borrowed cheaply for essentially the last multiple decades, and it was just borrow money and spend it. Doesn't really matter what you produce.
Yeah, they're throwing money at the wall, whatever
throwing
sticks.
money, and you could borrow it at like 2%. So who cares? Just produce anything and you'll likely get a return on your investment, because that's the barrier. That's the hurdle rate that you have to beat. But if Bitcoin's really going to be what we think it's going to be, people are going to be really choosy with the projects they pick. And that project better have a good value to the economy to actually earn the return that it would need to earn.
It'll either have, good sort of returns in terms of the economic value, or I don't know if do you ever talk about Nostr on here?
Rarely, but go ahead. Explain what it is, maybe.
Sure. So Nostr stands for notes and other stuff transmitted by relays. It is we'll call it decentralized social media. So it's
like a Twitter.
Like a Twitter, but there's no Twitter Corp that owns all your tweets. Nobody owns the tweets. You can run your own server, and you can keep all your own posts. You can help relay other people's posts. It's a way of just, again, relaying through channels that are interconnected, where there's no one central server.
Run on top of the Lightning Network, or no?
No. It's not. It's completely separate from Bitcoin. It just happens to adhere to the principles and ethos of Bitcoin, and they've incorporated tipping via Lightning Network. So if someone posts something and I go, oh, that's really insightful. If Luke Groman posts that chart and I go, oh, that's really insightful, I like that. Boom, I'll send him 100 sats. Thanks for sharing this. I learned something from you doing this work. So it's a way of you can sort of pay creators directly, because they've incorporated Bitcoin, because Bitcoin's just a protocol, just incorporated in. Like YouTube could do it, but obviously they don't. Mm-hmm. So in any event, where was I going?
Yeah, that's...
Oh, so sorry. I'm cutting you off.
You go.
Nostr was developed by a couple of Bitcoiners. How and why were they able to do it? Because Bitcoin gave them a degree of freedom that they don't need that 9-to-5 sort of job that was keeping them chained and using all their energy and sucking the life out of them. They were free to do as they pleased.
Killing them slowly.
Yeah, they were free to do things they were truly interested in, that they thought would add value, that they thought was fascinating and interesting. And now it's starting to, it's a niche, without question. It's a niche right now. But Jack Dorsey has abandoned Twitter, and he's dedicating himself to working on this. Him and NVK, who makes Cold Card, they did a presentation. They had Nostrasia. They had a conference in Asia for Nostr just a couple days ago, where NVK unveiled sort of a new thing that he's working on. Again, he built Cold Cards, but now he's taking the Q1, that new BlackBerry
what did he unveil?
So it's called Sats Link. Basically, he's coming out with a device where, and it's not for Nostr per se, it's just a communications tool. He's now thinking of, Nostr has opened my mind. Maybe I can think about communication in a different way, and I'm going to maybe take some of the stuff and the elements I've built, and maybe I can use them a little bit differently for free communications. Free is not maybe the operative word, but unimpeded communication. In any event, all that to say, when people are saying, okay, well, I'm abandoning that sinking ship, that unstable sinking ship, and now I'm giving myself the ability to do and build things, and these things are going to be useful and beneficial to people, that trend is already happening and has been happening for several years. Mm-hmm. And it's Bitcoin, the more Bitcoin goes, the more it accelerates that, because suddenly now there's that many more people who had that foresight of, I bought Bitcoin 2 or 3 years ago, and it was, or even last year, right? It was down. It was at 17,000 at the lows. It's doubled from here. Hey, this is good. Maybe I'm feeling a little stronger when I walk into the office. Don't talk to me that way, boss. I don't,
Totally.
Don't take that tone with me.
Hey, listen,
I'm a Bitcoiner now.
You know what happened in here a lot of times when Bitcoin hit about 35,000, everyone was like, oh, it's about half of the all-time high. But if you doubled your Canadian balance, so some people I know have Canadian, they look at the balance in Bitcoin in Canadian dollars, which is normal, but you're kind of tracking the price in US dollars. But when they looked at their Canadian price of Bitcoin, if they or value of Bitcoin in Canadian dollars, when they doubled it. So if they said, oh my gosh, if Bitcoin doubles from this US price, it'll hit the all-time high again. But my Canadian dollar balance is going to be well
even
beyond.
Higher.
Yeah, they were like, I'm about 15% ahead of where I was the last time Bitcoin was an all-time high.
Yeah.
I love that people were talking about that because now they were starting to think about currencies.
Yeah.
And the value and devaluation of currencies.
Yeah.
And Bitcoin's protecting you. And this is the whole conversation I want people to have, that this is exactly it. The purchasing power of Bitcoin is going up over time.
Yes.
Whether you want to see, and is it volatile right now? Absolutely. But over medium and long term, is this something you want to pay attention to? Absolutely.
Yeah. And then again, if we're talking about the unstable world that we see coming, the interest rates and all this stuff, how do I extricate myself from that to some degree, or insulate myself to some degree? Okay, great. I have this tool, and it's.
So what do you think about then the U.S. government saying, and the Canadian government saying, hey, you know what? ETFs are out now. Hey, Jesse, you have till December 31st, 2024. You got to put your Bitcoin back into like a Canadian regulated exchange, or you're not compliant in Canada and you're never going to be able to. What's the probability of that? No, okay. So I know you might not do it, but what do you think the probability of that is?
I think it's actually a little bit lower than maybe like the fear level might suggest. And part of the reason is Bitcoin is percolating up the chain a little bit. Did you see Joel Lightbound, an MP from Quebec the other day? Yeah, that's right.
I did see that.
Right. Yes. So Joel Lightbound, I forget what committee he was. I don't know if he's either the chair. I think he's the chair of some committee on innovation, whatever, in Parliament. He's a liberal French or Quebec or MP, heads this board, or this committee, pardon me. He stood up in Parliament and said, and this was on October 31st, so on Halloween this year, he stood up in Parliament and he goes, I want to acknowledge that today is the 15-year anniversary of the Bitcoin white paper, where Satoshi Nakamoto gave people, economic and social freedoms, this, that, and the other. And I want to encourage my progressive followers that this adheres to our values and we should be, considering this and adopting this. So he was, I mentioned the committee he was on because he had something to do with sort of blockchain, quote, regulation or something that I remember someone in politics I was talking to was like very worried about it. And then I said, hey, by the way, this guy Joel happens to be the chair and he seems to be kind of favorable. And he's like, oh, that's great. I didn't realize this. Da, da, da. And so now I see Joel do this, and he stood up and in Parliament, he goes, and by the way, just out of full disclosure, I own Bitcoin. Right? He said that as part of his...
He's a federal MP?
Yeah. Joel Lightbound owns Bitcoin.
He said it in... He was conservative. He's a liberal?
He's a liberal.
I didn't even know that. And I've seen I just watched it briefly.
Yeah,
I'm like, that's a conservative.
No, he's a liberal. He stood up in Parliament and he said, I own Bitcoin. Thank you, Satoshi. Mm-hmm. Like he said that in Parliament. So when, people get worried about this stuff, but when I see stuff like that, I think, I know that behind the scenes, Bitcoin is... Right, sure. It's that itch in your brain. Why is it working? Right? Why has it kept working all this time? Why do people keep talking about it and thinking about it, and like it won't go away? And the price, I keep hearing it's dead, but it's not dead. Like, why is that? Like, how is that? How can that be? So it's just like you keep coming back to it, and then eventually you maybe play with it or experiment with it, and then you own some, and it just works its way through you, right? And so we're seeing that coming out of people, and so it started. So Joel was one example of that happening. And I think there's more behind the scenes. The biggest
tulip moment for me with Bitcoin was when it hit the 17,000 all-time high, or whatever it was the last time, like in
2017 or
2017. Didn't it hit was it 17,000?
Was it 17 or 19? Either way, 19. I think maybe 19. It was just under 20.
You're right. Yeah. And when it came down from price, I fully expected it to go to zero.
Yeah.
I fully expected to go to zero. About a year later, I checked the price, and I think it was around 6K.
Yeah.
Don't hold me to that. Maybe it was 4K, 4.5. And I remember just being stunned, looking at my computer screen, going, "Wait, why isn't it at zero?"
Yeah.
Like I couldn't compute why this thing, because in my mind it was the tulip bubble. Remember all those charts that used to be shared about tulip bubbles?
Yeah, of course.
They've all kind of vanished a little bit now. You hardly see those things.
Oh, they'll come back after the next all-time high, right?
Okay, yeah.
Have you seen the video? It's this evergreen video that goes. It's a guy on YouTube, and I think he's a Canadian Bitcoiner, actually. He made a YouTube video. It's called "Don't Buy Bitcoin. It's going to crash." Have you seen this video?
I must have. It's just clips of people saying,
No. It's a 1-minute video of him sitting there, and he's got 4 charts open, and he goes one by one through them. And basically goes, this one time, Bitcoin was at $1 and then it went up to $20.
Oh no, I haven't seen this.
And then it crashed down to $10. And then this other time, Bitcoin was at $25 and then it went up to $150 and then it crashed down to $80. And then this other time, Bitcoin was at $300 and then it went up to $1,000 and then it crashed down to $500. So the lesson is, don't buy Bitcoin. It's going to crash. Yeah. But obviously it started from $1 and it ended up 500 at the bottom, right? So he's like, he's being sly about it.
Oh my gosh. I'll never forget I've shared this before. The AV guy at one of our events turns to me in the middle of one of our events. And he's like, hey, did you get this like Bitcoin thing? I don't know what I'm doing, but my buddy told me to buy it. This is like 2017.
Yeah.
And I just remember looking on the screen and he showed me it. I'm like, how about we start the Rockstar coin? You know, your Bitcoin thing.
Sure,
we'll just start the Rockstar. Like I knew nothing about it. Proof of work. I didn't know there was a limited supply. I knew nothing about it.
Oh yeah,
But that was kind of like my kind of journey and path. You know, you just kind of hits you in the head a few times until you finally like decide to study it.
Listen, that was same with me. I had 25 different shit coins at one point. I had in 2017 when I first started buying stuff. I had a Excel sheet. I was keeping track of all these coins I was buying. I had a few ICOs. I lost money on 20, like almost all of them. I think I had one or two that did well, but then the rest got basically completely wiped out. And that was a learning lesson. And that's why it's like, okay, you know, you have to take time and you get to know it and you play with it. And so you and I now, we try to shortcut people and say, hey, don't take these lumps.
Garbage.
I already took these lumps. Yes. Let me tell you about the lumps over here. You don't want to deal with this.
Oh my God.
And it's like, you know, in our heads, it's like, yeah, we're helping you get to the finish line and it's going to be smooth and it's going to be great and you're not going to have to worry. But the problem is it's like, okay, well then, you know, okay, well I just buy Bitcoin, I hold it and I do nothing. It's like, oh yeah, you know, maybe you need that teachable moment sometimes.
And it feels like you're not doing anything when you hold Bitcoin. You're like, well, shouldn't I be like investing or shouldn't I do something? And you're like, I'm not used to just buying and holding.
And that's the complete like perspective change that Bitcoin brings, where we've had money, supposedly, allegedly called money, dollars, that doesn't work properly because it is programmed to devalue, right? We know it's going to devalue. So it has its own forcing function of you better put this money to work because it's not working for you, right? You have to invest it and you have to spend time with, do I do this fund or that fund and this investment manager or that manager? Do I buy real estate? Do I buy gold? Do I buy oil? Do I buy stock? Do I buy bond? Blah, blah, blah. And you have to think so much and spend so much time and energy versus if you had money that just actually worked, all that, like think about the amount of manpower.
It's so ridiculous.
Think about the amount of manpower that's expended where people are like, okay, I got to decide, how do I allocate my money? How do I invest my money? Because my money doesn't work. Because my money's broken, I need to do something with it. They like to change the concept of
real estate only exists
because
of the current system being broken. You shouldn't be sitting at this table.
Of course not.
You shouldn't be sitting in this office.
Of course not.
Rockstar Real Estate should have no purpose. The fact that Rockstar Real Estate exists is a symptom of the greater problem. And you know, if there's one day where Rockstar Real Estate does not need to exist, to me that means Bitcoin won.
Yeah.
And I really feel like I'm hoping that's the path we're on. It's just amusing to me. Think of I'm not saying perhaps I'm the smartest person in the world, but I work hard.
Yeah.
My brother works hard. Mike, who sits right behind where you sit there, super hard worker. Many people in here, super hard workers. Imagine we could take the hard work and brain power of all these people and put them on an endeavor that helps society at a greater level. Instead, what are we doing? We're watching all this interest rate, trying to guess what Tiff's going to say at the next Bank of Canada meeting. Do we do variable, fixed? What are the rates of return? Like, it's a complete joke that we're spending this much human power, time, labor on something that we shouldn't need to.
Yeah, like real estate should be much simpler than it is, right? It's, hey, I like that piece of land. I want to buy it. Okay, give me some money for it. Okay, great.
And if you buy a rental property, okay, you wanted to buy a rental property, had this utility value, here's the return on it, but it's become monetized, let's face it, just like Rolexes and art and vintage cars and all of it, because we're missing a sound, secure money. And now we have this permissionless, secure system that's open source where everybody can look at it, a true ledger, I mean, it's really a thing of beauty. I do wonder if like 10, 15 years from now, you and I are talking, we're like, wow, it really was an inflection point in humanity's progress. I would love to be able to look back and say it was.
Yeah, I would love to be able to look back in 10 or 15 years too. And
Jesse, we're going to have to throw a party.
We'll have that podcast then too. But yeah, what you just said about, I would love it if Rockstar Store didn't exist, but it exists because of the system we're in. It actually reminds me, obviously you guys know Francis Pouliot.
Yeah.
I've heard him say...
He was on this podcast.
He was on the podcast
We're
recently.
big fans of Bull Bitcoin.
Yeah, I'm a big fan of Bull Bitcoin too. I've heard him say before on a podcast that his goal, like he wants the world where Bull Bitcoin doesn't have to exist because his service is predicated entirely on changing Bitcoin to fiat and fiat to Bitcoin.
He's one of the ramps.
Yeah, so if he's not an off ramp. So if fiat effectively doesn't exist, his business effectively doesn't need to exist. And he has stated publicly that like, I want my business to not have to exist. Like
It'll be greater for all of us.
It'll be better for everyone if I didn't have to do this. And so hopefully
we'll add Rockstar to the list of exact same thing.
Yeah.
I mean, it's just humorous.
Well, then we can focus on things like
energy, the environment, as much as we joke and all joke about energy, but can you imagine we just focus in the proper way of like, hey, how do we do things in a clean fashion and make things right and clean up rivers and lakes and do things properly? Like we can all focus on what's important.
And R2 and making beautiful, inspiring things, right? Like right now you look at the state of architecture and the displays they put up around the world. It's very it's uninspiring. It's dull. All the towers are just big square boxes made of glass. It's very uninspiring. It's soul sucking. But like we used to build beautiful things, right? Like you go to Italy, you stand in awe. You stand in awe of these things. And it's because they built with a low time preference. The people who started building those things didn't even live to see them built.
Yeah, the Duomo in Florence, they didn't even know how they were going to finish that dome, and they started building it.
Yeah, and that was on a gold standard, which was inferior to a Bitcoin standard. So I'm curious, obviously I don't think I'm going to be around, and if it's 200, 300 years where we can see some of the fruits of the seeds that we might be planting today.
The AI representation of Jesse Berger is going to be around, so there you go.
Yeah.
We're getting too high on Bitcoin now. We got to get Nick in here, because you know what? Nick couldn't be on the podcast because he was dealing with a rental property leak that we have going on, and he was like, I better come on the podcast with you and Jesse just to keep you two in check. Yeah. That's what he said. He's like, come on. Anyway, Jesse, name of your book, where can people find it? Anything else you want to share, please share. Where can people find more of Jesse Berger?
Yeah, before I do that, I brought you guys a gift. You guys have been very good to me over the last couple of years. So, just shouting me out at your conference, bringing me over, having me on the podcast, letting me say the unpopular or controversial things that I like to talk about and just speak my mind. Have you ever seen World War B? So this is... Do we have a camera over there? So sorry, for whoever's listening who's not going to see this. There's it's basically a coffee table book called World War B. And it's a fully... picture book of war propaganda, but for Bitcoin.
No way.
Yeah.
I thought I'd seen every Bitcoin book. I've never even heard of this.
Yeah. So just a little gift you can leave.
Oh my gosh.
Leave it sitting at a Rockstar. I think it's a pretty cool.
Thank you so much.
Pretty cool piece.
Jesse, that's so cool. Thank you, man. I really, really appreciate it.
Yeah, you're very welcome. I remember finding that and going, there's wow, that's really cool.
That's a great one.
Yeah.
Yeah. Thank you.
So anyway.
And Jesse, I feel fortunate, man. You speak your mind. We've only talked about a fraction of the things today that you are capable of talking about and like to talk about. And you've introduced us to some awesome people in your network. Just really grateful that we've crossed paths the way we have. And actually, I think I have to blame Greg Foss for that now.
Yeah,
I think it was Greg who said, hey, I know this guy, Jesse Berger. He's in Toronto.
I should never have sent him a copy of my book.
Yeah. So I'm just really fortunate. Yeah. Feel blessed to cross paths. So
for sure.
Awesome.
Likewise.
Thank you for the name of your book. Where can people find it?
Yes,
anything
of course.
You want to share?
Magic Internet Money, a book about Bitcoin is my book. You guys know, you've heard me on here a few times. Follow me on Twitter at Jayberjay, JAYBERJAY, and the website is MagicBitcoinBook.com. You can buy the paperback, the ebook, the audiobook, or you can buy individual pages for sats on my website with Lightning.
Yeah. Awesome. Jesse, thank you for this. Thank you, man. You're going to have to come back.
I'll be back.
In 2024, there's going to be enough to talk about.
Oh, yeah.
You're coming back.
Oh, I have no doubt. There's going to be a lot to talk about.
Hey, thanks for tuning in. You can find every new episode of the Your Life, Your Terms show on all the major streaming platforms. So Spotify, iTunes, Google Play. And if you'd like to get free copies of some of the books that we've put together, like these right here, or some of the reports that we've put together, like these right here, you can find all of those at www.rockstarinnercircle.com. That's www.rockstarinnercircle.com. That's it for now. Until next time, your life, your terms.